Hello, ladies and gentlemen. Happy New Year to you. This is Marty Erico from CrudeSquawk.com, giving you some general comments and thoughts on crude oil here. Alright, ladies and gentlemen, let's recap the last trading session of the year of 2012. Let's talk about Monday's trade on December 31st. In the pit session, we did have a high of 91.95. We had a low down at 90.25. And we did close and settle the year and day at 91.78. Again, that's 91.78 is our settlement number. Alrighty, ladies and gentlemen, so we do have a lot to recap here from the pit session from Monday. First and foremost, we had a little downside risk assurance here. We saw the Feb 85 put trade about 1,000 times or so here. Let's call it 1,000 times. We had the Feb 85 put trade, and they went for about 30 cents. So just a little bit of some large market participants massaging some risk around, holding that 85 as the bottom of this near-term trading range. But now let's go to the exciting stuff here. First, let's take a quick look at all of our levels and orders that we did see in the pit on Monday, that is. So we saw the Feb 90 to 95 1x2 call spread trade about 800 times. And they went for about $3.70. So just some upside activity. Again, that's buying the 90 call, selling the 95 call. So that's the 90 to 95 1x2 call spread. Then we had the Feb 90 to 93 call spread trade about 1,200 times in the pit. So more upside activity. And now as we take a quick look at this chart, which we have here in front of us, that's going to tell you that 93.5 is going to be some major resistance. First and foremost, the shaded box is going to be our trading range from the 85 to 90 that we've been stuck in for the last month. So as we've been chopping around that range, we finally broke out of it the day after Christmas. We had a couple threats, terrorist threats in the United Arab Emirates, I believe it was, yeah, United Arab Emirates, sorry guys. They had some terrorist threats on Christmas, the day after Christmas, which was December 26th. Also, Iran put in a no-sail zone in their ocean because they have their navy out there and all their oil tankers. So two geopolitical factors that made the market go higher, which led us to break out of that range that we've been stuck in all month. So finally breaking out of the range, looking at 91.5 as some upwards high that we made from that move. And now we just kind of watch a little bit of a chop trade here. We're chopping around for the last couple days. Now into the new year, we're going to see if we can finally break into the $92 handle. We're looking at this now resistance here at 93.5. That 93.5 is going to be some major resistance because back in October we tested it 3 times and we never broke it. 4 times, sorry. And we're going to probably make a 5th test here in the next couple days according to these call spreads. And we got to see now if we can break above it. Now, the one call spread that was traded about 1,200 times in the pit, the Feb 90 to 93, that would suggest they're selling the 93 call and they just want to trade within 90 to 93. But then again, 800 times the 1x2s came in and they wanted to go up to 95. So we can really watch this market break out here, and we're going to really watch and see if any type of geopolitical news comes out in the coming days that can make that possible. Also, fiscal cliff, that gets resolved, we can get a little bit of an uptick. Really also, fundamentally speaking in the market, we really could see the market come down to the 85 handle, but again, we really don't want to even bring in those fundamental factors because we have these geopolitical factors and obviously the draw and supply that we had from our inventory numbers on Friday also making prices go higher. But again, if all this gets thrown out the window and these all these geopolitical factors do not really kind of have a big impact in the market, we could see it come off and come off pretty quickly to the 85. So the 85 puts that were put in that we told you about, pretty big order, but definitely outweighed when it comes to the other 2 big strikes that were traded. So we got to really keep a close eye on all the news and all the factors in the market. We're going to watch big market participants trade tomorrow as they roll more positions on into the new year. And going to get ready for that broadcast. Talking 8:50 in the morning. Come join us down at NYMEX. Thanks, guys. Marty Erko, CrudeSquawk.com.